Hello everyone and welcome to video 6 in the first modules. This is the last video of this first module in which we'll be discussing spreads in trading conditions. Now this is very, very important when choosing the right brokerage or choosing the right prop firm, because different prop firms and different brokerages have different spreads and trading conditions that come with trading on their platform. So what is a spread? A spread is the difference between the bid and the ask. So the bid is essentially the highest price a buyer would be willing to buy a specific asset class for. And the ask is the lowest price in which a seller would be willing to sell that particular asset class to the buyer, right? So we all know that the market is comprised of buyers and sellers. So a buyer would be wanting to get the lowest price possible, and a seller is wanting to get the highest price possible, right? To make the most amount of money. So the bid is the highest price in which a buyer will buy something for it. If it was any higher, they wouldn't buy it. It would cost too much. A seller, on the other hand, is the lowest price in which they'd be willing to sell that for. Meaning, if it's any lower, they wouldn't sell it. It's not worth it to them, right? So the difference between that bid and the ask is what is referred to as the spread. So the spread can definitely differ over time. It changes all the time. Throughout the session, the trading session, it changes when the markets open and close, when the markets open and close for the day, so when the daily rollover happens, and this typically occurs, I'm in the United States on Eastern time. This happens at 5 p.m. EST, so whatever time that is for you guys, that's when the daily candle closes, right? And the spread typically widens. So that means when the spread widens, if you place a trade, you're going to be at a automatic floating loss that is probably going to be a little bit high. That's why I don't recommend trading during those specific times. I don't recommend trading before the market closes or right when the market opens or when those daily rollovers happen. Typically when you're in the session, it's usually relatively low. And what happens is, let's just say that the spread is 1 pip. Right, and you have a standard lot on AUD/USD. Well, one standard lot on AUD/USD is $10 per pip. So if the spread is 1 pip, when you open that position, you're automatically in a floating loss of $10. The thing is, any single trade that you guys open at any time ever, you're always going to start in a small negative because you have to pay that spread. And the spread, if it goes higher, that means you're starting off at a higher loss. If it goes lower, you're starting off with a lower loss. So these spreads, even if it may widen a little bit, it's not going to be typically the make or break of your particular trade, but it could just help get just a better overall price when you're looking to place a trade. You really don't want to be placing trades when the spreads are high. Certain brokerages and prop firms offer a wide variety of spreads. Some brokerages offer spreads on forex majors of 1 pip, 2 pips. Typically it doesn't really go above that. Prop firms are probably relatively the same, but all in all, you want to look for the best trading conditions possible because that is what's going to get you more profitable in terms of paying less fees, meaning your commissions that you pay to the brokerage, or the spreads that you pay when you open or close a trade. So you want the best trading conditions possible. Now, you cannot control the commissions or spreads for your particular brokerage, but you get to choose what brokerage you go with, just like you get to choose what prop firm you go with as well. Right? Whatever the spread and the commissions are for each prop firm, that's what it is. Whatever the spreads and commissions are for each brokerage, that's what it is. But you guys can obviously do your research and try to find brokerages with lower spreads. That's typically what I look for in my trading. And Alpha Funder has the lowest spreads in Africa. In its entirety of Africa, prop firm space, we are the ones that have the lowest spreads, and we do have very, very low spreads in comparison to other brokerages around the world as well. So we definitely want to give you guys a very good trading condition area in which you guys can be happy when you place a trade, that you're not getting eaten up in fees or commissions or spreads or anything like that. We want to give you guys that raw data and raw feed, meaning wherever you place your trade, is where you're likely getting in at around that price, and you're not paying a lot of fees when you're holding trades over the weekend, or you're holding trades over a considerable amount of days, to where on other brokerages those fees can add up over time. We want to limit that to give you guys the best trading conditions. So Alpha Funder, we do have one of the best trading conditions and spreads within any brokerage, and definitely in the prop firm space here in Africa, to give you guys the best advantage when it comes down to trading conditions for your trading.